Hello and welcome back. Hope you're good, doing well. So we are having a weekly market outlook. For from 18 March to 2022. I hope that sound is there on your end. Okay, so let's move on. So we're gonna start it. So first of all, we're gonna look at the calendar. We are having a busy week. We are having a couple of rate decisions, not a couple of, almost, I guess, four central banks are going to make a decision this week, and we may see here in volatility. Some big moves can happen during this week. So if I'm gonna look at the calendar, so industrial production was strong last night on yuan, and we are going to have a rate decision tonight from Bank of Japan and monetary policy statement, and while it is widely being expected that Bank of Japan going to come out from a negative interest rate, but you never know, they still can play it down. So if I'm going to look at the news, so recently we're going to look at that. So Goldman Sachs now expects that the Bank of Japan to hike rates Tuesday. So they're expecting rates gonna hike. So Goldman's Japan economist Ota cited stronger than expected salary gains at the annual Shanto wages negotiations and subsequent Japanese news reports of an exit from negative rates at the Bank of Japan March meeting that ends Tuesday. So while a slim majority of economists are still expecting that the central bank to raise the rate in April, so they may, rather than getting out from the negative interest rate tonight, they still may downplay it and can go to the April meeting. But the Ueda was saying that they were looking at the wages. So wages going to be important. Wages negotiations going to be important. So wages negotiations outcome was positive. All right. And if Ueda really was looking at that, wages negotiations, so they should, have to change their policy tonight. But as we know that they are very, very dovish central bank, all right. So they still may downplay, those, outcome of the wages. But while it is widely expected that they're going to come out from the negative interest rate, so all eyes going to be over there on the Bank of Japan rate decision, all right. The most important decision, we can say that, than the others. Okay, so we are having how many banks are coming this week? We are having Bank of Japan policy rate decision, and then we're gonna have Tuesday Bank of Japan, and then we're gonna have on Wednesday 20th March Fed rate decision 20th March, and then we're gonna have ECB rate decision. Then we're gonna have Swiss National Bank, not ECB. All right, so we're gonna have Swiss National Bank. So Swiss National Bank policy rate decision on 21, and then we're gonna have Bank of England rate decision. All right, so important rate decision. So we're gonna have manufacturing and services data is going to be released in the EU That data is also important for the euro, manufacturing and services data. So slowdown in that data will also drive those currencies. So these were the banks which are going to release the policy statement this week. Okay, so if we're gonna look at that, the very less likely possibility is that they're gonna abolish the yield curve. All right, this is the least we can expect. If they are still not going to come out from the negative interest rate, at least they should abolish the yield curve control. All right, so Goldman expects the Bank of Japan to also abolish its yield curve control, which the central bank employs to target longer term interest rates by buying and selling bonds as necessary. So it's going to be, they're going to come out from the negative interest rate, or they're going to raise the interest rate first time in 17 years. All right. And so far, Bank of Japan has not sent any signal denying the news so far. So the news broke out and that they're going to change that in this meeting rather than the April, so that we haven't seen any denying from the BOJ. Usually when news broke out ahead of the Bank of Japan rate this year, we see denying from the BOJ officials, but this hasn't happened so far. And at least, all right, Ota said he expects the Bank of Japan to abolish its yield curve control policy, which the central bank employs to target longer term interest rates by buying and selling bonds. All right, so still expect the central bank will not explicitly commit to size of its Japanese government. Yeah, so not sure about that. All right, so what they're gonna do, the ETFs cesations, so bond purchases or the cessation of ETFs. So they're still gonna buy bonds even after coming up from the negative interest rates. All right, they're not gonna completely abandon the bond buying program. So still they're gonna buy for the rest of the years, but the frequency and the size may change over time. So there we can see that the Japanese largest federation of trade union, Rango, on Friday said workers at the country's biggest firms are set to receive weighted average 5.28% in salary. So 5.28% rise in wages. So good. Good outcome of the negotiations. So in salary increments in fiscal year 2022. So this is a good. There we can see that the other has repeatedly said that the outcome of this year's wages negotiations will be key factor in ensuring sustainable price increases. So the Bank of Japan expects higher wages to lead to virtuous spiral that will lead to inflationary spurred by domestic demand. So this is the key factor. This is what Oeda was saying regularly, that they want wages outcome before they're going to make a decision. So wages negotiations outcome was good. All right, and based on that, many are expecting that they may come out from the negative interest rate tonight and can abolish the yield curve control. All right, and may say that their 2% inflation target has reached. So that's going to be the important. All right, a meeting so far rather than the Fed. The Fed is also important, but that's also important meeting. All right, and we are looking for this breakout to happen. So the sharp breakout All right, so sharp breakout and the sell opportunity. When you see that the sharp breakout going to happen on the dollar again, you are looking for that to sell. Okay, so it's I mean, if we're gonna look at the back at that the dollar yen. All right, so if you're going to look at the inflation, in the Japanese inflation first. So they have to come out at some point. All right, and the window is closing quickly for them, as we know that the other central banks, they are preparing for the rate cuts. The only bank which is having the negative interest rate so far is the Bank of Japan. So their window is closing, so they have to make a decision, as I said in the last weekly market outlook, that their window is closing. They have to make a decision before the other banks started to cut the interest rate. So that's why, you know, many economists, they're expecting that they may, you know, come out from the negative interest rate on in the March meeting. So there we are having Japanese inflation. So inflation is already falling, all right, and yes, that's what we are expecting, the inflation to continue to keep falling. And let me find interest rate. Okay, so this is what we are, you know, inflation is falling and window is closing for them. So if inflation keep falling, if inflation keeps falling back towards 0%, all right, so this is the window which is closing for them. If they're gonna hold interest rate lower for longer, and inflation fall back to zero, okay, and they don't do anything, all right, so they they're going to be mess for them. So the window is closing, so they have to call it out, the negative interest rate, come out from the negative interest rate to zero, all right, and may hold at zero. I don't think so they're gonna go above the zero, but possible they can go above the zero, all right. And as you can see that the inflation is also slowing down, yeah, so may again fall into negative territory. So that's secondary, that's secondary. We are not there yet. So which is clear right now, I mean, that they're going to come out from the negative interest rate, as inflation came, all right, but they didn't do anything. They held the negative interest rate, and now inflation is coming down and window is closing for them. And yeah, so important meeting for the Bank of Japan. So if they come out from the negative, so when that has happened, okay, we can clearly see back in 2008 there, right at this area. So they come out in 2008 there is there. All right, so they have done a couple of times, all right, but again they started to cut. So there we can see that they did in 2002, all right, and then they did it 2007, 8, all right, when inflation came, then they raised the interest rate, and then again suddenly they started to cut. So they're going to do that again. They're gonna come out from the negative interest rate, and then again they're gonna get into the maybe negative territory again, all right. So inflation fallen, yes, inflation fallen there, and then they went into negative zone here, right, within these areas. So again inflation came, so they're going to come out from the negative interest rate, so may hold that for some time over there, but again they're gonna gonna fall back to negative territory. So window is closing for them, all right. So if we're going to pull out the dollar yen on top of that, okay, so we saw every time when they did that, we saw strength on the dollar yen, All right, so there we can see that the dollar, we saw dollar, strength on the yen. So we saw a big drop here when they changed that. We saw a big drop there on the dollar yen. All right, and similarly at this area we saw a big drop here. All right, and this might be a bigger, longer term, a move we may see on the dollar yen. Longer term cyclical move can happen over there. Unless we come out, and we may see a big drop over there, which can come up to 90 or 80 in longer run. All right, 90 or 80 in longer run. Okay. On the other hand, on the other side, we know that the Fed has also come out, has to cut. So the gap which we are having, the policy gap, all right, that policy gap is going to shrink over time. All right. So I guess we can put that on top of that. So what we need to do only is to just put out a USINTR, right, and USIRYY. So there we can see that. So the inflation already going down. Okay, this is the US inflation, and we are in this symmetrical triangle. We can say that. So sticky inflation in the US right now. So sticky inflation, and we may see breakout of that triangle for the downside, and can head towards the 2 or even below 2, and rates are going to come down in the US too. All right, and this is the gap which is gonna shrink over time. BOJ coming out, inflation is falling, BOJ coming out from the negative interest rate, Fed is set to follow the falling inflation, so gap gonna shrink over time. All right, and dollar yen is sitting at 150 at top. So once that gap gonna shrink between the yields, all right, dollar yen gonna fall to the downside. So we already can see that the inflation is lower and dropping in the US, okay, and falling in the Japan as well. All right, so tonight may be a major event. All right, that event can we may not see sharp aggressive move tonight. All right, what can happen? All right, we can see reactions, some early reactions in the market on the yen pairs. All right, and again investors can wait for the Fed to make a decision. All right, they can wait for the Fed to make a decision. And after that, all right, and after Fed rate decision, Fed, Swiss National Bank, and other banks, we may see sharp moves. Sharp moves can happen because this is the event market was waiting for. All right. So what has happened earlier before this March to come? What was happening actually? Market was pricing in for aggressive rate cuts in the US. So market was expecting that the first rate cut going to come in March. All right, and then market started to price in June. All right, but after having higher inflation in the US at 3.2%, so market started to price out rate cuts in the March and even in the June. All right, so I mean the percentage is simply dropping for rate cuts in the June as well. So Powell comments going to be important. So what is okay? So we stuck in the US inflation since within this area. Okay, this triangle. So we can see that triangle. This is a triangle. US inflation triangle. So we stuck into that triangle since 1st June 2023, and today we are having 1st January 2024. All right, so we're stuck into that triangle. So because of that, the Fed was saying that the inflation is sticky. Because of that, they are holding the rates higher. They are holding rates higher for longer. That's what they were saying, all right? Higher for longer. So if Powell is going to give us a clue that inflation is slowing down, data is slowing down, all right, and they may cut earlier than expect, or if Powell is going to move away from higher for longer stance, then we may see significant weaknesses on the dollar. So the dollar went higher because of the PPI data and the CPI data last week. All right, so we may see significant movement after the Fed, after the Powell rate decision. Okay, so now let's move on. So on the other side, we are having Bank of England rate decision and Swiss National Bank rate decision. So the surprise we may get from the Swiss National Bank is early rate cut. All right, so if they cut the rate early, all right, right now there is no projection for rate cut 175, but market is already pricing in for rate cut. So we are having significant slowdown in the Switzerland. All right, so if I'm gonna look at the Switzerland inflation, so we can see that the inflation is at 1.2. So the target is 2%. Okay, so we are well below 2%. There, that's their target. So inflation should stay below 2%. So if we're gonna look at the CHINTR, okay, so there we can see that. So they are having interest rate at 1.75, and while the inflation is sitting at 1.2%. Okay, so or we can say that the wedge has, or the triangle has broken out over there. The sticky part is gone. Okay, and inflation is also falling in the Switzerland. All right, significantly fallen below their 2% target and heading down. Right, and if we get a surprised cut from the Switzerland this week, Swiss National Bank, all right, they cut the interest rate. Okay, then we may see significant drop on the chief. All right, so chief can fall very, very aggressively. CHF can drop. Okay, so the pair to watch for that move gonna be the chief yen. All right, so chief yen gonna be the pair to watch. Okay, so what actually I'm doing, I'm just chief yen. Okay, so chief yen, a sharp aggressive drop comes over there, just chase out that pair. Okay, so what actually happening here? Okay, so surprise cut from the Swiss National Bank, and a rate hike from the Bank of Japan, so going to be bullish for the yen. Okay, so one bank going to be bearish and the other bank going to be bullish, and that can drive the aggressive move on the chief yen to the downside. We may see a quick aggressive drop can happen over there. So this is basically you are watching. Okay, we're gonna have reaction over there. I mean the Swiss National Bank, we're gonna get the idea that either that move is coming out or not. Okay, may not come out. The aggressive move may not come out during the Bank of Japan rate decision. Okay, but that can come out after the Swiss National Bank rate decision. If they cut the interest rate, the Swiss National Bank cut the interest rate, then we may see big players, they can jump into the market after that, after this rate decision, 8:30 a.m. on Thursday. So Thursday, you are watching the Swiss National Bank rate decision as well. So one bank raising the interest rate, all right. One bank is cutting the interest rate, possibility to cut the interest rate. Okay, so if that's not going to happen on this meeting, if Swiss National Bank is not going to do that on 21st of March, okay, so highly likely they're going to do that on the next April meeting, I guess. Okay, so the next June meeting. All right, so the next release is going to be on June. Yeah, so June 2020. So a long time. All right, so long time. So 20 June is a long time. So inflation can significantly fall below 120 during that period of time. So yeah, so it's a meeting to watch. Can happen. The cut can happen. Even if it's not going to happen, yes, until 20 June, inflation can drag more lower, even maybe below 1%, maybe below 1%. So the trend is significantly clear over there. So we may see a quick aggressive sell-off on the chief yen. All right. That's where the divergence is coming over there between these two banks. Policy divergence. Okay, right now we can see that it's in a trending market, okay, and just pushing higher, and struggling to push more higher above that on this weekly time frame, and the stock over there. Okay, so we may see such kind of moves can happen over there. So if that happens, I would love to see that. That happened back in 2008. All right, 2008 we got a aggressive continuation sell-off over there. So from that top to that top, almost 30% $30 drop happened over there. So that's ideal. All right, that's gonna be ideal, and that's gonna be ideal. So it only can happen, that move can only can happen if aggressive rate cuts are going to come. So we are not expecting aggressive rate cuts. All right, so far you're expecting it to just fall up to this low, right, up to 62, and the 4-hour time frame correction, which is just simply appearing over there, that to break out this week during the both central bank rate this yen. So the first is the dollar yen, all yen pairs. If they come out from the negative interest rate and going to be a slightly hawkish, BOJ hawkish. All right, so you are looking for yen to give you a big moves. All right, and this to fall into this zone, and the 4-hour moving averages to hold. All right, so 4-hour moving averages are prices coming out. Price is already under those moving average, 4-hour moving averages. Okay, so you are looking to hold that 4-hour moving averages. Okay, we still can visit that top. We still can visit this top. All right, we still can visit that top. So if that happens, then you are paying attention at 171 for longer term, reversal to happen on yen, and top to hold. On the other side, we are having dollar yen. Okay, so dollar yen to break down, this flag to break down. Okay, once you see that the breakout is coming over there, just simply get into the trade, and this area on a breakout, you can put your stop loss just behind that, behind the previous high. Okay, and you can set your target within these areas. All right, and this previous low target. All right, and 140 gonna be the target. The target we are still expecting to reach to 140. Okay, and in best case scenario, we are expecting it to go much lower. Okay, I have explained that already, that we are expecting this to go up to this area. All right, this previous low 127. So there is a chance that Swiss National Bank, they can cut the interest rate. All right, so if they're going to cut the interest rate, we may see more upside on this. I have explained already that chart in the previous weekly market outlook. All right, so if you remember my yield and yield chart. Okay, so if they cut the interest rate, the Swiss National Bank surprise the market with the cut. Okay, we are expecting it to go up to this area, that place. This is a weekly top. All right, so if I'm going to pull out yields, so yields to reverse during this week. All right, so yields to go back up aggressively. Yields to also visit that previous, let me pull out 10-year. US $10-year. So US 10-year is more, stable. So US 10-year to go to this area, this top. All right. So Chief Yen is Euro Chief is basically leading us that where we are heading on the yen pairs. All right. Now if I'm going to pull out the dollar yen chart on top of that, we are still at the top on the dollar yen. All right, so when we're going to have the chief yen going to keep pushing back towards that weekly top. All right, so we are still, dollar yen still a sell. All right, so 10-year bond features still a buy. Bonds still a buy back to that high. So aggressive move can happen over here. All right, aggressive move at this on the chief yen for upside, this area. So you're watching that too for upside. All right, so one more leg lower is less likely. Okay, this one more move is less likely. We are not anticipating that one more leg can happen only then if central banks are going to say that they're still not going to cut and going to hold the rates higher for longer. And if inflation surprise for upside, we can see that inflation is already falling in the Switzerland. All right, so up at 1.2. In next couple of months, we're going to see that the inflation in the Switzerland going to fall below 1%. All right, and which going to make a stronger case for the Swiss National Bank to cut. And similar scenario going to happen with the other central banks. Inflation is in the triangle, stuck within the triangle in the most countries. Okay, sticky inflation. And why inflation is sticky? Because of the it's not coming out. So the reason why the shelter. Okay, so if you're gonna look at the shelter, this is the part which is holding the inflation higher. Shelter, or the proper. I mean rent. Okay, so rent is still holding the inflation higher. It's a lagging data. All right. I mean, it takes time. It takes time for inflation to come out from the shelter. All right, so if I'm gonna check all one by one, if we're gonna click on all, it's gonna make food. We can see that the food is close to at 0%. All right, so fallen to 0. Energy, yes, we are below 0 on energy. Electricity, we are has fallen close to 0 on electricity. So all items less food. All right, so fallen below 4%. Yeah, so coming down. Apparel 0. Yeah, so we are at the 0 on apparel. So medical and commodities 2%, falling to 2%. And shelter, we are still stuck at close to 6% on the shelter. All right, so it's not coming out. The shelter is holding the delayed. I mean, it takes time for inflation to come out from the housing sector. It takes time. All right. So that's why the Fed is saying that they're gonna hold the rates higher. They actually want inflation to come out from the shelter, rents to fall. All right. So property market to slow down. That's where they are, more focused. So there we can see that education and communication at 0, and food 0. All right, food away from home close to 4%. Gasoline below 0. Natural gas, natural gas. The price of the natural gas has fallen, close to 150. All right, and there we can see that inflation has significantly gone below 0%. So commodities and food 0. All right, so new vehicles, bang, 0. Service, less energy, falling. Services, yes, services sector is not slowing down. Okay, so services also holding the inflation higher. So services, less energy services. Okay, so if you're going to look at the service sector, so service sector is also not slowing. So we're going to have services data, I guess, in the US this week. All right, so they're at 21st March. So manufacturing and services PMI data is going to be released. So we are not having slowdown here in this sector, manufacturing and services. Manufacturing is slowing down. Okay, so manufacturing has fallen below 0. Last month it come up from above the 50. All right, gave some strength to the dollar. All right, and the services is slowing down. Okay, so services slowing down, but not slowing down. There we can see that the services are slowing down. Come on, I'm trying to catch that. So services slowing down. The services, has fallen below, 50 back in, 2022, but they haven't fallen below 50 yet. All right. So if this sector, the services sector is also not slowing down with the shelter. All right. So it is close to 5%. We can say that. So 540 services. So medical and care, they have fallen below zero. So these two components are holding the inflation higher at the moment, are holding the inflation in the triangle. Okay, so this triangle, which I have already shown, we are having that triangle in the US inflation. So the reason is the shelter. I have spoken about that before, all right, in the previous weekly market outlook, that the inflation is sticky just because of the shelter. All right, now you can understand that which component is holding the inflation higher. So that's the component, those two components. So services and shelter, they are holding the inflation higher. So it is very less likely that they're going to jump from this place for more upside. All right, so they're going to drop shelter and services. They're going to drop from the current price, and we're going to have inflation below 2%. So this triangle, so on the US IRYY. Okay, so we are stuck into that triangle, this triangle. Now you guys understand that what is causing this headline inflation to stay into that triangle. So it's the services and shelter. So once that gonna come below close to 2%, we're gonna see that the triangle gonna break to the downside. So it can fall very, very aggressively. Okay, these inflation in these two components can fall very, very aggressively, and the whole picture can change. The whole picture from the Fed can change, their thoughts, all right, or they're saying that higher for longer. So these two components, when we're gonna have a quick aggressive drop in these two components, others we can see that other components, they are close to zero, right, or some of them has fallen below zero in a strong disinflationary wind. Okay, we are having very strong disinflationary wind on those components, but these two are still holding the inflation higher. So these two components, okay, once they're gonna fall, we're gonna have breakout of that triangle, gonna come down. Okay, and where the interest rate is holding high, 5.50, 550. All right, and then suddenly Fed, what Fed gonna do? Oh, inflation is falling, all right, let's cut the interest rate. All right, so they're gonna come down like these stairs very, very aggressively to the downside. Okay, and that's what we are waiting for, and that's what are going to drive the dollar yen aggressively lower over time, longer term. Okay, that's a longer term picture. On the other side, we're going to have the Bank of Japan. They're going to come out from the negative interest rate, so slow down basically. All right, so we are heading towards the slowdown. That's the picture behind the fundamentals. All right, so what we can have, all right, from the central banks, and hawkish tilt is very less likely I mean, we're not going to have hawkish tilt. So the question is Bank of England. All right, so what are they going to do? So they are also having pressure to cut the interest rate. All right, and pound is already strong, while market is expecting that the Bank of England, they're going to cut the interest rate. Okay, but on the other hand, we're expecting that the Fed to be more dovish than the other banks. When Fed is going to be dovish, all right, so the other currency is going to have a sympathy move for upside. Other currency is going to get stronger against the dollar. All right, so who's gonna cut first? All right, and how aggressively they're going to cut the interest rate can have the impact of their on their currencies. All right, now let's move into the charts. So keeping that perspective into mind, all right? So we were expecting dollar to drop from that weekly top, dollar index to go down. Okay, so we are into that trend, and at this area we were expecting it to go all the way back to the previous floor, all right? And we did not get that move simply, all right? So we were expecting it to go all the way to the floor, this move to happen, all right? So what happened over there, we were expecting this flag to break down. All right, now you understand that I'm not sure I have updated that chart. Maybe I have updated that chart here. Okay, but I haven't updated on the trading view, so may have posted there on the DXY. So we were expecting breakout on the dollar index, sharp breakdown. This chart. Okay, so we were expecting a sharp breakout. All right, so we did not have that sharp breakout on the dollar index. Okay, so dollar index is still going into the correction. I mean, still within that correction. So what simply has caused that is the inflation. Okay, what we were expecting inflation to fall, and last week that didn't happen. We are still into that triangle, the triangle which I have just explained. So these inflation numbers, okay, so we are still within that triangle, this triangle for breakdown to the, so we are having sticky inflation. So what was the projection? The projection was 3.1%, but inflation came at 3.2%. okay, again, those two components are holding the inflation higher, the shelter and the services, all right, and others are going down. And the other thing which helped the dollar to go higher was the PPI data, right? So came slightly strong on monthly basis. So PPI is also not that much strong. Okay, so if you're gonna look at the PPI, so PPI, let's PPI, open that chart, PPI, US PPI yearly basis. Okay, so PPI is sitting at that within that triangle too. So we hit the floor here on the US PPI, right? So just got a small push over there, 1.6. the trend is still to the downside. Okay, we are not anticipating it to go up, and it is very less likely it's not going up. So small push up came over there on the PPI. So that caused the dollar to slightly go higher, okay, and yields to go higher. So core PPI and PPI data helped the dollar to go higher. Okay, so I'm going to go back to the dollar index chart again. So if I'm going to go to the dollar index, okay, so what that has done, that has gave some strength to the dollar. Okay, this move happened over there. So we did not got so what we were expecting that triangle, the inflationary triangle, to break down. So breakdown on that inflationary triangle gonna give us that aggressive move to the downside, the move which we have already on the gold. All right, and what that has done, those inflation numbers, they have gave some strength to the yields. Now yields are back at the place where they were before. Okay, before the top yields, we were expecting yields to go down. So the yields jumped on that data. Okay, so basically that data is making the Fed narrative higher for longer again. Okay, higher for longer. Okay, we are there at this top again. So from that top, we shouldn't expect this trend to continue to keep rising. Okay, as the last month data was just a one-off. We can say that the longer term data, the longer term inflation data is still bearish, still to the downside, and yields are very much higher, okay, and they're gonna go down. So we can expect the yields to continue, or bonds to just keep getting sold off. All right, so I mean, we are still going down, okay, and that triangle still has to break down and continue to keep dragging to the downside, okay, and yields to go down to the downside after, specifically after the Fed rate decision. We may see significant buying over there on the bonds, okay, and if Powell is going to give us any clue, okay, I said that any clue that they may cut, couple of other other Fed officials, they said that holding rates higher for longer can be dangerous for the economy. All right, so timing is very important. So some officials are giving us a signal that they may change their thoughts, all right, and they may cut the rates earlier. All right, so basically any clue from the Powell, any dovish clue from the Powell can drive the dollar aggressively lower. Okay, that's the picture, and that's what you are looking for. Powell to give you a clue, and bonds, they can move aggressively. Okay, bond yields can move aggressively, so we may see breakdown of that, and that's what you are looking simply. So 2-year yields to break down and continue to keep falling. All right, up to this low. If I'm gonna pull out the risk reward ratio, right, so you obviously gonna trade on the bonds or futures. Okay, so you're looking for this move to happen, all right, up to this area, and in best case scenario continue to keep dragging more lower. Okay, on bigger time frame, as I mentioned that the Euro chief, okay, we are looking these to go this area, that date, all right, this all these to break down to go into that direction. Again, this is very less likely, only can happen if something happened in the world. All right, so back to retest of the 5, more likely we're going to go down, all right, where the inflation is telling us. So this is going to be the move you are looking for, all right, so for short term, medium term, and longer term. Inversely on the 10-year, okay, so 10-year yield is same. Okay, so 10-year yield is also same. What's gonna what's gonna be the worst is that the dollar index can visit that low. All right, so we'll talk about that. So basically you're gonna look for this to break down and continue to keep falling all the way back to that previous low. So this move, so I'm gonna draw some risk reward ratio on top of that. All right, so longer term, continue to keep the yields to continue to keep falling much lower. All right, so this weekly low. So the Fed meeting is important, and the BOJ is also going to be important. Okay, so go down all the way back to that low. So there is the bond features, all right, which you're paying attention. T-bond features, it's just simply inverse. All right, so we were expecting it to go back up previously, and we got a move, okay, but we didn't see target all the way back to that high, back to that top. All right, so we were expecting it to tag that high, and perfectly continue to keep rising all the way back to that high. All right, so we didn't see that continuation, so we are back at the low again. So if I'm gonna invert that, okay, so same like the yields. Okay, I didn't see next breakout as the inflation numbers, they change the picture. All right, so I'm gonna look at this place. That's where you're paying attention. All right, in these areas where you're paying attention, you're looking for trade within these areas. Let me remove that and pull out the So basically buying, all right? T-bond futures at a buy place again. You're looking for a buy opportunity. Okay, and longer term, much higher. So we may see, yeah, similar. Okay, so we are expecting yields to fall, test that low. Or first, these going to be the target, all right? These. And if Powell is going to give us a clue for early rate cuts, then we're going to have continuation for upside on T-bond features. Okay, now I'm going to make my chart correct. All right, so let's make it like this. So these are going to be the targets. All right, so these are going to be the target. So first you're looking for more than 1-to-1, then this target, then this high, and then this weekly high. Okay, so this is a chart to watch during the Fed rate decision. All right, and it is at a buy zone again, and we may see any dovish comment from the Powell can drive this chart aggressively lower. Okay, all right, because this is where the big institutions, they are looking for the opportunities at the moment. They're looking to buy the bond to get a clue that early rate cuts are coming. All right, and looking for features, the bond features, to just continue to keep rising for longer term for upside. All right, okay, so there is the opportunity for buy. So hopefully same again. Okay, I have shown that in the previous weekly market outlook as well, this buy opportunity. All right, so if you remember, this was the chart. Okay, we got the move and then we got a drop, and the recent move, I guess, yeah, the recent move was that. All right, and we were expecting pullback to happen up to this previous low for buy on the T-bond feature. So you're paying attention on this chart. All right, and services, if specifically the services sector is falling below 50, all right, that can drive the dollar lower. So keeping that thing in mind, all right, so it makes the picture clear now that what you are looking basically in the rest of the market. Okay, so you're simply looking for the sell opportunities on the dollar, all right, and risk on move in coming days, depending on the Bank of Japan, how they does. All right, so yeah, Bank of Japan is a major factor. All right, a major factor. They can shake the market. All right, so we do have another opportunity on the Nvidia. We were expecting a buy opportunity, already jumped over there. Okay, so short-term buy opportunity was there on the Nvidia, and it's already pushing higher. So Nvidia, AMD, you're paying attention on these charts. They can jump back up aggressively. They are down because they are down because we were having higher inflation numbers, and market market was expecting that Fed going to be hawkish, Powell going to be hawkish, which caused the dip to come on the equities. All right, but this dip can be a buy opportunity. Right, so I posted that chart. Let me find that chart. Nvidia. So Nvidia was a buy opportunity. All right, so it can extend up to 1200. So the updated chart is there. So it can extend up to 1200. All right, so yeah, after the Fed rate decision, we may see more upside on that. On the Nvidia is very strong in terms of momentum, right? And you're paying attention on this buy the dip opportunity, not just on this. Okay, so AMD is also a good one. AMT also bounced off from that low and can continue to keep pushing more higher. AMD, Nasdaq and index, they all can jump. They all can jump after the Fed rate decision. Okay, so we were looking for buy opportunity on the Nasdaq 100 index previously, and it is bouncing off aggressively from the floor. All right, and it can extend all the way back to that high, this high, or up to 20. All right, so 20 is in sight. it can continue to keep rising towards 20. So I will look at the pairs one by one. Okay, I was just trying to make the case for the fundamentals. All right, so when you understand the fundamentals, you can understand the movements, what movement you are basically looking for. Okay, so this is what we were expecting. Nasdaq index to pull back, test the floor, and then go back up. So it tested and bouncing off from the floor and going higher. So actually this is a buy the dip. All right, so we are having already buy the dip at night on the Nikkei index. Nikkei index bounced off already, and which is a good sign. Okay, and that buy the dip opportunity also gonna be on Ethereum. All right, so Ethereum can go back up to all the way. So Ethereum is having more potential as with compared to the Bitcoin. All right, so if I'm gonna adjust that chart, then you're looking one more leg lower. Let me remove that and just simply look at this as a flag, right? Or wedge is just simply appearing over there on your lower time frame. Okay, another leg lower can happen on lower time frame at this area. So if that happens, then you are looking for this to go back up. Okay, one more leg. So far it found its floor, okay, like this, and go back up. We are having more potential as with compared to the Bitcoin on Ethereum, and you're looking for this move to happen. Chart I have already posted on Telegram. I'm gonna look at that chart. All right, there we can see. So Ethereum still hasn't taken out that high, while the BTC formed new all-time high. So we are having new all-time high on BTC, while we are not having another all-time high on the Ethereum. So Ethereum is dipping over there on 4-hour time frame, so we may get a buy opportunity. Yeah, so we got a dip. Simply the reason I have just explained to you, inflation is spiked up last week. All right, shelter and services, the only two sectors which are having higher inflation at the moment. Okay, and PPI jumped. Based on that, market started to gauge that Fed Powell is not going to be hawkish. Powell is going to be hawkish, not going to be dovish. Before that, market was expecting that Powell is going to be dovish. Rate cuts are coming. Let's just buy the risk on assets. Okay, that's why Nasdaq was just keep pushing higher. Other risk risk on assets like S&P 500, Dow, Nvidia, all those individual stocks, they were rising. But last week inflation report gave us that dip. Okay, and after the Fed rate decision, that dip gonna be a buy opportunity. All right, and the Ethereum is far more better as with compared to the Bitcoin by the dip opportunity. All right, so chart I have posted over there. So this one hour time frame chart. All right, so we need to slightly adjust that. We got to bounce off. Okay, but price is still within that wedge. Okay, so I'm gonna adjust this, and this is what you are looking for. I'm gonna remove that, and you're paying attention on this low. Okay, so we are having a kind of flag over there on 1 hour time frame, which is just simply appearing over there. First, you're looking for Bitcoin to break out that flag and continue. If so, then you can buy the Ethereum. All right, so if Bitcoin doesn't break out and both moves neck on neck and goes down for another leg lower within that wedge. Okay, so remember we had that wedge back in I guess let me look at that. I will look at that. All right, so we had that wedge on Bitcoin, and we got a breakout of that wedge nicely, and Bitcoin never looked back after that. So we are in a similar formation again. Okay, at this area, if you remember that. Okay, so we are having same picture again. So you're paying attention at this previous low, and either price to break out for upside aggressively and continue, or test the floor or new low and then give us a new low and buy the dip around 33.350, right? 33.50 or 33.20 and then continue. Okay, so this place, and we were having that triangle wedge. Okay, and what happened over there? Flag formed, okay, and broke out. We never looked back at that price at 40 and hit the 72 area. Bitcoin is hitting, I made new all-time high. So same again. Okay, so you're paying attention at this place, looking for a breakout. If it doesn't, then new low, right? So new low, test that and give you a buy opportunity. So this is the entry and stop placement behind that. Once you're gonna get into the trade, and the target, you're looking new all-time high basically on the Ethereum. Okay, so new all-time high. So the first target gonna be obviously the previous top. All right, so the first target going to be is the previous top at 4,000. But what I see is that the Ethereum is going to break above 5,000. All right, it's going to break above 5,000. All right, so there we can see that the Bitcoin broke the previous all-time high, but Ethereum hasn't. So Ethereum basically is lagging the move. Okay, and we can catch up. We can have a catch-up move over there. Okay, so buying the dip on the Ethereum is more sensible than buying the dip on the BTC. Okay, so that was the BTC and Ethereum chart, and they're going to be a buy the dip on Nasdaq 100 index as well. Yeah, the Dow as well. Okay, so Dow by the dip opportunity as well at this floor. If it tests that, visit that low. Okay, so what kind of trade? We already had that. Let me pull out. All right, so I guess I have already shared that chart when the previous move was happening over there, previous by the dip. So similarly, if one goes up, then you follow the other. So both, even if S&P 500 is visiting the lows, then you are expecting that to go back up, new all-time high to come out. I'm looking charts randomly, so I should have started one by one. So let's go and start one by one and then come on all those charts. All right, so this UTC, okay, so if UTC is testing that, all right, so look for buy over there on USTC. All right, so dead coin, okay, but if it moves, then it can move very, very aggressively. All right, this place and target's going to be within these areas. Again, if it goes to 10, that's going to be a great move. It goes to 10. All right, so if it goes to 10, that's going to be a great move. So if not, then come at 20 and then go back up to 40. All right, so Luna too. All right, so if Luna comes to this floor, then you're looking for a buy opportunity again over there at these low 8. All right, and go back up to those highs. So targets can be changed. You can change the target. All right, so I mean based on the moves, but yes, tag the high again. So dollar index, okay, so I have already told you that the bigger picture, okay, the bigger picture is the inflation. We are stuck into the triangle. okay, and breakout of that triangle to the downside is very, very likely in coming months. Okay, the only two sectors are holding the inflation. One is the shelter, and the other one is the services. All right, and once we can have slowdown in inflation in those are lagging sectors. All right, so inflation goes out from those components very slowly, takes time to go out. Okay, and breakout of that triangle will keep dragging the dollar lower, okay, and yields lower. So in simple terms, you are simply looking for these two to hold that top and give you that low, target that previous low, and continue to keep dragging more lower. So we are still having strength on the gold. Okay, so gold is still a lead. Gold is still our leading chart. Taking time to come out. Come on, gold. So there we can see that. Okay, so previously, if you remember my previous weekly market outlook, I told you that gold can go to a correction. Okay, and if gold goes to correction, then others can follow up. And this is the picture we are having. Let me go back to that chart again to just let you know that okay, we are having a perfect picture over there, setting up for the dollar to run down. So previously we saw, okay, let's just look at that again just for understanding. So previously the move happened. I'm gonna pull out this gold here. All right, at this area. Okay, so this place. Yeah, what we saw gold jumped aggressively. All right, so broke above that previous high, and euro was at this previous low. Okay, then euro, caught up. Euro caught up, gold went into correction at this place. All right, so those who are watching me on TradingView, so there was the jump on the gold. Okay, so currencies, they lagged, gold went into a correction, and they caught up. Risk on currencies, they basically, gold went for risk of move, all right, and risk on currencies, they remain in the sideways market. So similar price action is happening again. All right, and euro caught up. So if I'm gonna go and look at the current price now, so we're in the same situation again. Okay, so gold going into a daily correction, and we are setting up for a breakout for upside. All right, back to that previous high. So that picture hasn't changed. So the worst picture gonna be that euro gonna visit this previous low again. Okay, so we have to keep in that mind as well. This I will tell you why. As yields back, and let me pull out the yield. Okay, now we can see that the yield has gone back to the previous top, this top. So euro is still close to that top, so we may see fall back to that previous low. I'm not anticipating that fall to happen, but make sure you are prepared for that. The comments can drive that. Okay, so the Powell comments can drive the dollar still higher for another leg back to the top, like we are having yields. Okay, yields are testing the top, but that's not going to sustain for longer term. All right, you know that. What is the reason why that cannot sustain for longer term is the inflation coming down. Okay, still gonna be a bearish dollar setup. All right, so what you are basically looking now is that the DXY to go down. All right, if I'm gonna go to the 4-hour time frame, the clean chart, let's go to there. Okay, so we are still looking for this to drop. Okay, what is the worst? If Powell is not going to play out as market I mean, the last week inflation data. Okay, so then this move, okay, all the way back to that this high. I'm not anticipating, but in case if that is going to happen, you are prepared for that. Okay, and then again go down from that top. We are not anticipating that move. All right, but in case we are wrong and that's happening, still going to be a sell opportunity from that top. All right, so keep that thing in mind. Okay, so far 4-hour moving averages to hold, and the momentum is shifting over there for the downside. Dollar to just continue to keep following the gold. All right, keep going down the XY, and the other charts are based on that, guys. Other charts are based on that. Now I'm going to go to quickly on charts one by one, remove that. Okay, so what is the worst? The worst is that the current flag, which is just forming over there, that's going to break up. Okay, and we're going to visit that high again. Again, we're going to look for this to go down within that wedge, okay, and channel and go all the way back to this previous low. All right, so far you are watching price to hold this area and break down and continue to keep dragging lower. All right, that's my dollar catch chart. So watching this previous top, I have already posted that chart back in general when we were expecting a sell opportunity over there. I guess I do have that chart already. Let me know, and let me show you the chart. So supposed to be on a DXY, I guess, not this DS. Okay, so previously we were expecting that to go down from that top. I guess this chart maybe should be on that. There you go. Okay, so this is what we were expecting previously. This chart I was looking for. So dollar CAD to fall all the way. So we had that move. Okay, we did not see breakdown at this area, so we may test that top again. If it happens, then again the structure gonna stay same for downside. All right, this move we're expecting, and we found another leg higher. I mean, we found a floor over there at dollar CAD at that trend line and bouncing back to that high. So the current price going to be important during the Fed rate this year. All right, that's what you're watching on dollar CAD, and the euro dollar to go back up. All right, that's a 4-hour time frame. That's a 4-hour time frame, but we're expecting it to go back up. Simple. All right, so I have posted some charts on the euro dollar there. Let's look at them first. Okay, so we were expecting a buy opportunity here, a breakout and continuation. So during the inflation data, okay, so we got a move, but we didn't see continuation all the way back to that high. We got another leg lower. Okay, ABC move is just simply happening over there right now. So same picture is happening on all pairs. So we got a deeper move on the New Zealand dollar. New Zealand dollar went all the way back to that previous low, and hence going to be a good buy. So there we got the move, okay, but we didn't see, we got the move, all right, but we didn't see breakout and continuation. So we went into another leg lower caused by that CPI data. So basically you are still looking for this to go. As said that Fed meeting gonna be important, Fed rate the seen on Thursday, all right, but we are looking for this to continue the move for upside. Okay, so worst picture going to be the sharp breakdown to the downside, like we have seen on the, let me tell you what I'm talking about. Okay, and you have to be prepared for that move too. If that happens, then we still can get a good trade on the euro dollar for the downside. Okay, there we are having the New Zealand dollar is testing that low again. Hence this is less likely but possible. Okay, so you prepare for that, make sure you prepare for that. So this previous low, okay, so New Zealand dollar is testing that previous low, this price. Okay, so the price we were having on 13th February. I'm not anticipating, but this is a huge move. Okay, and data, euro data can drive that move, and Powell. All right, so okay, so make sure you're prepared for this move as well. We are not looking for that. What we are looking is just maintain the trend. Okay, maintain the trend, break out that ABC move, and continue to keep rising all the way back to the high. And the New Zealand dollar going to be a buy opportunity from that floor, from that area. All right, so we are having that lag, so make sure you understand that possibility as well. So what you're looking is just simply 4-hour moving averages, the trend to hold, and price to just continue to keep rising. Okay, now you see the move. Okay, so 1-to-1 risk reward ratio first, at least price to give you within these areas. Okay, so still pullback is possible. Price still can test that low. All right, and that's a 4-hour time frame move you're looking for. So pound is also similar, but pound is slightly dovish, so I'm gonna ignore this structure. We're expecting pound to go back up to, there is a rate the CN on pound. Okay, and that's the reason pound is slightly, you know, under pressure because of the Bank of England rate the CN. But after that, it's going to be clear that you are looking at to go back up. Okay, so you're paying attention on that floor, looking for price to hold, and it is holding that trend, and simply go back up. So dollar to get weaker, and the top is here. In best case scenario, pound to visit that high at 31. Whatever the outcome is going to be of the BOE, all right, so you're simply looking for dollar to fall and this to go all the way back to the high. And Australian dollar on the other side, go back up. All right, so we got the move on the Australian dollar too during the CPI data, right? But again, we saw a one more leg lower. Okay, but we are simply looking for this to go back up. Okay, same trade. If I'm going to invert that chart, you're going to see it very much similar like the DXY chart. Okay, so DXY is very much similar like the DXY chart. What's going to be the worst picture? This is going to be the target. The worst picture is that the price can go all the way back to that top. If so, then still again going to be a these tops. Worst picture. So same like the DXY. Continue to keep moving for upside. Same goes with the New Zealand dollar. New Zealand dollar is at a much better place, right? So we have seen more drop on it as we compare to the others in terms of structure, but still we are expecting it to go back up. All right, so it's at a much better place. And you're looking for this move to happen. Okay, so gold is still well ahead. Okay, gold is still at that top, so that's what we are looking for. So New Zealand dollar is back at that floor, so you're paying attention and looking for this to go back up, this ABC move to go into another direction. All right, so similar kind of move to happen like we had over here. So dollar chief goes down. Okay, so there is a point which you need to keep in mind. Okay, so we may see a different move, a different kind of move over here on the dollar chief if we see a cut from the Swiss National Bank. All right, so then we may not get a move here for one more leg lower. Then this is gonna break out for upside, and we can have continuation move for upside. All right, so this sideways market can break out, and we can have that move for upside. So chief is extremely overvalued, and that can fall very, very aggressively if Swiss National Bank cut the interest rate. Okay, so far we are expecting dollar to get weaker. All right, and similar move to happen. So we got the drop, but we didn't see the whole move, the whole leg on the dollar chief. So let me look at that chart. Okay, so we got a drop, but we haven't got a complete leg over there on the dollar chief. So this was the old chart where we were expecting it to drop. So we are back at the top again because of the inflation numbers came out over there last week. So you're paying attention and looking for again this to drop. Similar move like previously. Okay, back to this area or all the way back to that previous low. Pound CAD went back to that top. Okay, and we were expecting it to drop from that top, and it's dropping from that top, and you are looking for this flag to continue to keep dragging, triangle to continue to keep dragging. So this is going to be a good chart to short, all right, during the Bank of England rate. And if your pound goes down, so you're paying attention on this, you're selling this pair, all right, so selling this pair. So better to let this to push up for another leg higher, okay, and then rather than chasing the move over there at the current price. Okay, we still can go higher for another leg, like I have shown you pound buy opportunity. So we still can go back up. This is your pound dollar, a pound CAD. Pound New Zealand dollar went down, went up. All right, so same analysis. Let me remove all those indicators and stuff. Okay, so we are same analysis. Okay, so hold that and continue to keep dragging lower that resistance. So we're expecting pound Kiwi to get stronger, dollar to go down. All right, and you're looking for this move to happen. So pay attention on your lower time frame, watch price action over there, and try to catch the top and look for this to continue to keep falling. All right, so other side to the so go to the opposite, so go down like we are having on the gold. So go down, similar goes on to the New Zealand pound Australian dollar. So these charts are same. So we got a drop last week on them. We got a nice move on these charts, so but we did not get a whole leg. All right, so we went into a pullback again. So nothing surprised over there. Okay, so we got a pound Australian dollar drop, sell off came, but they held the wedge. All right, so like Euro Australian dollar held the wedge, gone back up. So pound Australian dollar similarly gone back up. So rather than looking for continuation move, all right, so better to let the price visit the high, and then you are paying attention for shorting again. I have shown you a continuation move on this on the Australian dollar, US dollar. If that happens, then we're going to test the top and we're going to see continuation to the downside. All right, so then this triangle gonna hold and gonna continue to keep falling lower to the downside. Okay, so if I'm gonna invert that, similarly I have shown a buy opportunity over there on the Australian dollar, this move. Okay, so pay attention at the current price. If it tests the top, you're looking for it to drop. Right now you are paying attention at the current price, and this to hold that previous high. Okay, so Euro Oz also went back up. So we just saw that chart. So we were expecting it to go down. It went nicely aggressively to the downside, but again held the trend line, or held the wedge, okay, this wedge. And there is possibility to test the top again. As said that if that happens, then all the way move can happen. All the way move, all right, on the euro dollar, all the way to the downside. All right. Or let me tell you in a simple way. Okay, so let me invert that chart. If it goes down or goes higher back up on this chart, okay, that means the Euro Australian dollar is dragging more lower, testing the floor, like New Zealand dollar has done, and hence we may have a sell-off after that on the euro dollar back to the bottom. So let's just ignore that case, all right? So don't consider that case, all right? So you may get confused over there. So let's just stick to this, all right? So let's just stick to this. You may get confused over there. So stick to the bearish dollar move for this week, all right? And this breakdown from the current price, get down all the way back to that low, or another leg higher, test the high, then start falling. Okay, so basically you're looking for short from the current price or from that previous top. Okay, so same goes with this chart. So hold that resistance and go into that sideways market. Check your lower time frame for the entry. I'm just putting a risk reward ratio over there, right? Not showing you the exact entry, okay, but just showing the opportunity. So we are expecting New Zealand dollar to go back up or dollar to go down, okay, and this to go opposite direction, go down. And again, if we get a rate cut, then we're not gonna have another leg lower, okay? And this wedge, at some point we're gonna have that wedge gonna break out for upside as inflation is falling in this Switzerland, and a rate cut gonna come, which can drive the Switzerland for downside. Okay, let's ignore this chart for this week. We still may see another leg lower, but I don't see the reason for this to happen, as we are having more upside on the euro chief, okay? So that can push more higher. So there is still possibility for another leg lower on this chart. Okay, we still can go down, so like one more leg lower. If you remember the previous one, this one more leg. Okay, so previously we were expecting, in the last week we were expecting continuation trade to the downside. That didn't happen. It reversed after that. We got the first move, okay, but didn't continue there at this area, and then pull back and gone back up. So if you are really interested into this sell side for continuation to the downside, okay, so better go on this chart after the Swiss National Bank rate, the CN. I see more upside on it for longer term, hence not making sense at the moment for shorting it. All right, and yeah, so expecting chief to go down for a while. And same goes with this chart. So they can visit the lows, guys, but you know, limited to the downside. They are, you know, simply setting up for a bigger deep move for upside, maybe they can go all the way back to that high. Okay, this weekly high, this all the way back to that weekly high. So we'll see how far that goes. Okay, so yeah, not interested very much on this chart this week. They can continue to keep falling. As said in the previous weekly market outlook, we are so far having that move on the Kiwi Chief. Okay, we got a breakout, we got a breakdown. Okay, went into a pullback, then one more leg lower still can happen. So not a best chart at the moment, so I'm going to ignore it, these two charts. So Kiwi Cat to go back up. Okay, we got a deeper pullback. It can tag the lows, but we're gonna ignore that, so we're gonna expect it to go back up. All right, so go back up, this move, go back up, and we can expect Uzi Cat to also go back up. Okay, so in the previous weekly market outlook, we were expecting it to do a buy opportunity. Similarly, we are expecting a next leg to happen over there. Okay, so continuation, hold the current trend and go all the way back up. So previously we had that chart here. In the previous weekly market outlook, we were expecting it to give us a buy opportunity. Okay, so we were expecting it to continue here. And in the previous weekly market outlook, we were expecting a buy opportunity on that. This chart. And then it broke out. Continued to keep going higher. Okay, so we were this chart, I guess, where it has gone. This picture. Okay, so in the previous weekly market outlook, we were expecting a buy opportunity, and then we got a next leg higher over there from that floor price. Nicely held that and just continued to keep pushing more higher. So similarly, we're expecting continuation. Okay, continuation to happen, and yeah, so one more leg at least, which needs to take out that high, and in best case scenario, go all the way back to that high. All right, so continuation for this week. Euro pound bounced off from the lows, and that's what we were talking about in the previous weekly market outlook. Okay, so if it tests that low again, specifically during the Bank of England rate decision, okay, so you're expecting it to go back up, breakout for upside. Same like last week. All right, so I guess I don't need to talk about this much. You are just simply paying attention at your support area and looking support to hold and price to break up for upside. Okay, another leg lower to happen, and then you're looking it to go back up. All right, that's Euro pound, and pound chief opposite. Pound chief is still pushing higher, and if we're gonna get a rate cut from the Swiss National Bank, then we're not gonna get the move which we were expecting since very long on this. Okay, and then we're gonna have the price gonna visit the high, the top. Okay, so I'm gonna make it more simple. When you see the trend is breaking out, this sharp move is happening, this trend is breaking out, aggressive breakout is coming, then look for sell and continue to keep falling all the way. Otherwise ignore it, let this to continue to keep pushing all the way back to that high. So Australian dollar and New Zealand dollar finally bounced off from the lows. Okay, and that's what we were looking for last week. There was a trade and it bounced off, gone back up. If it comes down to that low again on daily time frame, then pay attention. Otherwise, the move has gone. It's a very slow moving pair, right? But finally, yeah, we can see that there was the opportunity, all right, and it moved away from 200 pips from that low, more than 200 pip move. So in the previous weekly market outlooks, we were expecting it to go back up. It came at a good price. So again, ignore it, all right? So there is no opportunity, but keep eyes in case price fall back to the floor again at these support areas. Then you are interested to go long on it. There is no sell opportunity, all right? So we are stuck into that bigger daily flag, which can break out for upside at some point. So yeah, that's the Aussie New Zealand dollar. Was a good opportunity. Okay, if it comes to the floor again, pay attention. So there I was talking about, all right, so a big day on chief pair. So I'll try to make it more simple, guys. Meeting, I guess, has already begun over there, and if you see that some kind of news is going to leak over there, okay, and a stronger sell is just happening over there, you simply follow that and look for this to continue to keep falling. All right, follow those moving averages to hold and the next legs to happen. All right, that trade to happen. So yeah, breakout to the downside. Euro yen is also similar. So euro yen gonna be much better as with compared to the chief yen, okay, because chief yen is leading, going ahead, and if that goes down, okay, and euro yen doesn't, then you're selling it. You are looking to sell it. By the way, it's back at the top. All right, so you're looking it to go down 28 December lows. All right, this move from the current price and start behind or slightly go back up. Okay, so you're looking for that. And pound yen, also same, pound yen to drop. The current flag to break out. Worst case scenario is to go all the way back to that high and then give a sell opportunity over there. All right, so this move to continue to keep falling all the way back to that low. Dollar yen, as said, breakout, sell the breakout. Okay, dollar yen, sell the breakout. CAD yen, sell the breakout. Okay, we have already got the drop on these. They have already started to fall, but the inflation ticked up, caused these currencies to pull back. And if we get interest rate hike from the Bank of Japan, that's going to be a good news. And you just simply sell the breakdown. All right, so sell the breakdown on this yen pair and continue to keep falling all the way to that low. They can drop much lower, guys. Again, they can drop much lower. Suddenly they can drop much lower. So if Bank of Japan surprise, then simply get in and hold it and look for it to go down very aggressively. So that's what you're looking. Okay, so breakdown and sell. Same setup on the Aussie yen. It gone back up. We were expecting triangle. Simple breakdown and sell. Okay, so you're looking for a breakdown and sell and continue to keep falling for a big move. Kiwi yen same. Kiwi yen is much better, as we can see that finally it's falling from the high. And if we get again good news, that can drive it much lower. So keep breaking Kiwi yen. Kiwi yen didn't give us a triangle. So simply break down that flag and sell. If one more leg appears, if BOJ doesn't do anything, okay, one more leg appears and test the high, we'll see. Okay, but yes, from the current price, breakdown, aggressive breakdown, and continue to keep falling. Continue to keep going down. Weekly lows. Get this weekly low. EuroCAD to continue to keep going opposite. Not a best pair, but just keep rising. I'm gonna ignore and continue to go over this. Okay, so continue to keep rising. Cat Chief, I'm gonna ignore too. Yeah, so continue to keep rising. Go to the opposite side. Yeah, ignore this. Dollar Chinese yuan to break down. So after the Fed rate decision, we may see breakdown. They have changed their reference rate. They set up to 19. This is not the updated one. Okay, but we are still expecting it to visit that low after the Fed rate decision to fall and continue. Yeah, so Euro Chief to continue as said earlier. So the opportunities we may get on the indices, because we are indices and the cryptos. All right, so in indices and cryptos, I'm gonna make it more simple and just gonna based on support. All right, so let's just remove all those. Okay, go and look for this support area to hold. Okay, and look for entry over there. And break out and continue to keep pushing more higher. So the target you can set over there simply using this fib retracement up to 27. Best case scenario, go above the 40,000. All right, so buy opportunity within this place. Okay, now let's look at the Nasdaq. Nasdaq has already bounced off nicely. So basically, if Nasdaq and index hit the top and Dow still remains at the floor, okay, so buy Dow. So Nasdaq's already shown that Nasdaq long at the start, so it's pushing higher. So you're holding the moving averages, all right, and holding those 4 hour moving averages. You're looking for this to go all the way. Yeah, in longer term, go to 20,000. So for short term, just hit the previous high. Already bounced off, okay, but in case if it you cannot run after the current move, okay, but you are expecting it to fall back within these areas. If it fall back, then show some interest. If it fall back and test that, then you are looking this move, like that move. So move has already begun. Last week on Friday we were expecting a buy the dip opportunity on the Nasdaq, and it's happening now. So it's very much gone, okay, but in case if it dip again, then you can catch up. If it dip again, I guess I have already shown that chart. So same goes with the S&P 500. All right, so S&P 500 also moved away. S&P 500 also moved away, but in case if it tests this low again, all right, this support area, then simply buy the dip opportunity you're looking for, this back to that top. It dipped, may not get the dip again, and price can continue to keep rising, but you shouldn't chase at that top. If it hit the floor, hold this support area, then and 5200 50 400 or 55 54 55 target for next leg to appear over there. Okay, so previous dips were there when I was talking about the buy opportunity. So the next triangle, if that floor is being tested again, then you are looking for that to hold and continue buying the dip. S&P gone. Okay, Nasdaq is also gone. All right, but the Dow is still close to the floor and can visit the floor. So if the Dow visit the floor, then you can look for a buy opportunity on the Dow. So US 2000 small caps slowly pushing higher, but I would like to see this to at 1900 before going to continue. Yeah. So if other goes higher, then obviously you're going to see that Russell will also going to push up. All right. So if so, then you're paying attention at this area, okay, and looking for this move, okay, from the support areas. Pay attention at the support area and look for this whole move to happen all the way to the longer term target back at that high. This is the continuation. Otherwise, test the floor and then we'll see. So right now, continuation. Okay, continuation of that 4-hour moving averages. Okay, so they're very much similar like the Ethereum chart. Okay, this move, the current price to hold and continue. German 30 is very strong. Again, we are not having pullback. They are just keep pushing higher. Again, simple, these highs and lows to hold. All right, and again, short-term continuation on these charts. Okay, if that test that low and price remain within these sideways markets ranges, okay, hold that support and go back up on next leg higher. Euro 30 is Euro 50, Euro stock 50 is also so strong bullish. Okay, and these ranges. If it drops that much low, then this dip to happen. All right, and Frank 40 is also very much similar like in the previous weekly market outlook I have shown. Yeah, so sideways market. So similarly, this is more strong. CAC 40 is more strong. So dip. All right, so short-term dip within these ranges and hold that support area. And another extension of this previous leg. Okay, so UK 100 index, I'm going to ignore that. So Nikkei also went higher. There was a buy the dip opportunity on Nikkei. So if rate rise come from BOJ, then we may see aggressive sell-off on the Nikkei. All right, but right now I'm going to ignore it, and I'm expecting it to just keep pushing more higher back to that high. So let's just be neutral ahead of the Bank of Japan. So Chinese indices are picking up from the lows. All right, so they are picking up, and we are expecting them to just continue to keep rising. So we are having some strength over there, right? And these flags to just keep breaking out for upside. Hang Seng Tech Index to just break out and continue. All right, and golden dragon also continue for longer term for upside. Gold, okay, gold may, gold is slightly tricky. All right, so gold gonna look for the Powell comment, and based on that, gold can react. So if Powell is going to be hawkish, then we may see sell off on gold and silver. If Powell is not going to be hawkish and going to be dovish, all right, which is more likely that the Powell is going to be dovish, then gold can spike up, but more upside, I guess, going to be limited. All right, so in longer term, we may see this kind of formation. Either we're going to have continuation or a big leg to the downside on gold. So I don't see opportunity on gold for this week. All right, so you only can trade for short term on it for buy if you know how to do it. All right, so otherwise, stay away from the gold. All right, better look for opportunities on other. And if you are trading for short term, it's possible to trade on short term on gold. All right, but for going against, looking to sell it, looking to counter the gold, only sell it if you have a hawkish comment comes from the Powell, and a big aggressive sell-off come out over there, and then look for it to go all the way up to the weekly floor. And same goes with the copper. Okay, copper is also testing that top. So silver. All right, so we are basically neutral on these two charts at the moment. They made their moves. We were expecting them to happen. Okay, we were expecting silver to go all the way back to that high. We were expecting buy opportunities over there within these areas. If you remember, my old charts are there on Telegram, and those moves has already happened over there. Let me quickly find the silver one. Now, if we get a move on dollar, okay, and we are wrong on dollar is going to get stronger, all right, which is less likely at the moment. Okay, dollar has to play with a catch-up move, and that move can drive the risk on currencies for upside. After that, we can see buy opportunities on dollar. Okay, once dollar going to set the 28 December lows, so we are still counting on that move to happen, dollar to visit that 28 December lows, where the silver and gold right now. And once we're going to have that move, we will look for sell opportunities in silver and gold. Okay, so these were the old charts which I was talking about. So silver was at 22 when we were expecting it to take off from that 22 and continue to keep rising all the way back to that high. So that move has happened over there already on silver. All right, so these moves were on 1 hour time frame, and big moves happened over there on daily time frame as well on silver. So that time silver was a good to go long opportunities at these places. All right, in this move. So after, once we're gonna have I just don't see the sell opportunity at the moment on gold and silver till we get the strength on the risk on currencies. And once the risk on currencies get strength, make their move, after that we may have a sell opportunity over there. Okay, but if you trade based on technical or support and resistance, all right, so silver is the best place to watch a price action. If stronger sell appears over there within these areas, then you can expect a sell opportunity. Okay, right now we don't have a reason at the moment, and that's why silver is pushing higher, and there is a very much good chances that silver gonna break through that 28th December high. So the only two charts at the moment which are breaking the 28th December high, three charts. Okay, the one is the UK 2-year yield. 2-year yield has tested the 28th December lows. Okay, and on the other side gold and silver is also testing that 28th December or 25th December high. All right, this high, so 4 December here on, but this is the high on gold and and silver. So very much likely that the silver gonna break through before going to give us a move. All right, so not a best at the moment. Oil was strong, okay, pushing higher and looking for it to go down, same like the previous weekly market outlook. Not a best at the moment, so struggling sideways in the sideways market. Okay, so you look for it to hold that and go down. Oil, okay, not a best at the moment to trade on oil, hence it tests the 65 and you look for it to buy to go back up. So yeah, that's the counter trend move. Natural gas is at a good spot to look for buy again. High high swap going to be over there, margin requirements going to be high, but again it's at a good spot to look for buy. All right, so if it tests these lows, then you are paying attention, look for it to go back up. All right, so Nvidia is a buy, just shown that for a time frame, look for this to go back up, and the move can go all the way up to 1200. all right, in best case scenario. There is a talk for split at 1000. If it doesn't come, then trend can continue to keep rising. AMD also a good buy opportunity. All right, so pay attention at the support area, look for this to go higher. NEO again at a floor at a $5. Okay, so you're paying attention for this to go back up, take off from that floor. Right, it's a good spot. It is at a good spot to look for longer term buy opportunity. Apple still dragging lower. Okay, we are still expecting Apple to go back up. Apple is struggling big. Apple is in a deep correction than others, and it is in a daily correction. All right, but I mean, still expecting it to find its floor and go back up. All right, give us that one more leg higher. Go up to 141 or 127. Okay, still bullish on the Apple. Microsoft gone back up already from that floor. If it tests that, then there's gonna be a buy opportunity on Microsoft. Or a short-term buy opportunity from this floor again. If it comes and hold that. Okay, so hold that and go back up. This top or new leg higher. Google gone back up already. Again, this is what we were talking about in the previous weekly market outlook. Google to go back up. So Google held the floor, gone back up. So similar move to appear over there on Apple. Apple is still, Apple went into for a daily correction. So Google gone back up. We don't have anything on the Google to just continue. And Amazon, if it comes to that floor, then it's also pushing higher. And Meta can continue to keep rising after the Fed rate decision. They can jump after the Fed rate decision. So basically, the current floor, okay, the current support area, you're paying attention that target or continue for more upside. Continue for another leg higher. So Tesla is a buy. Okay, so I'm saying that since very long. Tesla, since I say, every time when I say that the Tesla is a buy, it drag more lower, right? It fall for another leg lower. So yeah, we're still bullish on it. Okay, we are still bullish on it. And we are looking for this to go back up. We have removed all those gains up to 70%. All right, up to 70% gains gone. So you're paying attention on that support area and looking for this to go back up. All right, and for longer term all the way back to that high. All right, so still bullish bias on the Tesla. Okay, Netflix is also strong. It's trending and can continue to keep trending for more upside and can break through that top. So we don't have a pullback over there, right? So you are having only a little 1 hour time frame correction. So you're paying attention. Let me remove that and talk about that, where you're paying attention after the Fed rate decision. So after the Fed rate decision, these individual stocks, big names, they can jump. All right, so this is where you're paying attention. This support area, that's going to be the short-term move, and the medium term and 700 target, the medium term 700 target, you're paying attention. So now let's look at the Bitcoin. Okay, so as I said earlier, Bitcoin to go back up. Okay, and there is a good chance that we're not going to get a big drop at the anytime soon on Bitcoin, and Bitcoin can continue its bullish trend, and very much likely that 100k is in sight. Okay, 100k is in sight. $100k is in sight, so we can see strength on Bitcoin, specifically when the policy policy is shifting, so that can drive for further upside. So many factors are there. We were not anticipating, as you remember, that we were expecting a deeper pullback before to continue, but the leg was possible to appear over there on Bitcoin, like Nasdaq 100 index. Okay, so this one more leg and continue towards 80, or one more drop, okay, and then continue to keep rising. It's a buy opportunity already on the silver, as I have already shown. Okay, but these are the support areas to hold you. When you will see that the Nasdaq 100 index gonna break through the previous top, all right, highly likely you're gonna see that the Bitcoin will also continue to keep rising. Ethereum. All right, so I already explained that what to look for on Ethereum. Yeah, so buy opportunity on Ethereum. 4-hour moving averages to hold. Price slightly went lower, but still can come up. BNB also going to be a buy. BNB is also below from the previous high. It hasn't tagged that previous high, and highly likely we're going to have that top. So BNB caught up BTC later on. Yeah, bang on. So gotta move on that. Very aggressive move. And so there we were expecting it to continue. So finally it's set to it is set to hit the top. So still it is close to the top. Okay, for short term it's still tradable, and the technique is same. Use stop loss when you're buying these coins at that top. Okay, so hold that floor and go back up, and in best case scenario break through that top. Okay, so that's my similar kind of opportunity like Ethereum. But there are many coins which are dipping like that. Okay, they are at a good spot to look for buy on them. This is what you are looking on the BNB. So next leg higher to happen. Solana dipped but still going higher, and Solana to also go all-time high, break through that high, break through that top. Finally, let me check the old chart again. It's going higher now. Okay, so we still can catch up the all-time high. We still can break through the all-time high. So Bitcoin was a lead. Bitcoin was a nice lead for us to look for Solana to continue to keep rising. So Solana is also a catch-up move for short term. All right, so we can see that it can attack that top and can break. But make sure if you are trading on these coins at current price, okay, so you trade for short term only. Don't trade for longer term. The longer term move has happened already on these coins. They moved away from these lows. How far they can go after breaking the all-time high, you never know. We never know. Okay, up to how much extend they can the previous top. Okay, for short term, if short term pullback comes, like I have shown on the Ethereum, okay, looking for a pullback and looking for a buy. So right now it's very, very strong, and just keep breaking the top, all right, holding the trend and just keep running for upside. So if it comes into the trend again, all right, then you are looking for this to hold the trend and continue. All right, so like this it helps. So if it comes into the trend, okay, look for support areas over there and look for this to continue to keep rising for upside all the way back to the top. Otherwise, the trend is very much strong and sharp, and prices just continue to keep rising. So I mean, you won't get much on it, but yes, this is a good indication for you that the current move can continue. This is a good indication that the current pullback can be bought on Ethereum and Bitcoin. Okay, we got a dip here. Dip started from there. Right, dip started from there and there. Okay, and the next dip there. Okay, a measured move or ABC move or flag or whatever. All right, but that measured move happened into the other, with trending move for upside on Solana. Solana went higher, broke through that top, went higher. Okay, so if Solana keep pushing higher, it's not pulling back, keep pushing higher, you are simply expecting Bitcoin to break through the top, continue to keep pushing more higher, and Ethereum to also a buy on Ethereum to also follow the Solana. Make sense? Yeah, good indication so far. If it doesn't pull back, then a good indication for the Ethereum to continue its bullish trend. So we still can get a $1,500 move on Ethereum. 5,000 is in sight on the Ethereum. Yeah, so Rawan coin is also a good coin to look for it to go back up. So I want to see it more deeper pullback. Okay, and this to catch up the Solana, catch up the Ethereum, catch up others. All right, and still stuck at that floor. So cheap coin, it's a major coin. All right, and still cheap, by the way. So we may not see Rawan coin to fall up to that much low. All right, but the current price, you are paying attention. The current pullback might be a last one before we see the next rise on it. All right, so Any pullback is a good one to watch. So if it doesn't rise aggressively for upside, at least will give you a continuation trade. If Bitcoin keeps pushing more higher, Ethereum keeps pushing more higher, like the Solana, okay, this will at least give you a this much target. Get back to the high from these lows. So you pay attention at these areas, and in best case scenario, a big aggressive run over there for upside, and continue to keep rising. Yeah. So wave previously I posted that chart. It bounced, all right, but the ideal move which we were anticipating is not appearing over there at the moment. So I posted that chart way before. So we are very well away from the low. Should be back in history. So we are well away, yeah. So yeah, if it goes higher so aggressively, then okay. Otherwise, don't chase that run. Okay, don't chase that run. If it fall all the way back to these lows, because it's expensive simply, guys. At 3.75, around $4, very expensive coin to buy at the moment. If it falls to 2 or this previous low, then you are showing interest. Or if it rises very, very aggressively, then so rose, dipped, paying attention. Looking for this to also jump like others. Same like Ethereum. These floors to hold, get that trade, and in best case scenario, continue. All right, guys, let's just finish here. I guess enough for this week. We spent almost 3 hours. 2 hours or 3 hours? 2 hours, I guess. All right, let's just finish here. And you can watch me. You can catch me on Telegram. If I can share setups over there, so you can follow me over there. All right. So thank you very much for coming into the weekly market outlook. Big week. Let's see what these central banks are going to do. All right. What kind of outcome we're gonna have. Thank you.